Welcome to AlphaStockAI, where we break down the stock market with deep analysis to help you make informed investment decisions. Today's focus? Two key players in the AI and data center industry, Supermicro and one of its competitors, Dell. We'll compare their latest earnings, profitability, and whether SMCI's explosive growth justifies its valuation against an established giant like Dell. All data in this video is sourced from AlphaStockAI.com, your go-to platform for comprehensive stock analysis. Check it out for more in-depth insights. Now, let's dive in. Supermicro delivered a stunning earnings report on the latest earnings call on February 11th. Revenue skyrocketed by 54% year over year, reaching a projected $5.6 billion to $5.7 billion. The driving force? A massive demand surge for AI infrastructure, particularly its transition from Hopper to Blackwell GPUs. This shift is a game changer, positioning Supermicro at the forefront of AI-driven data centers. Despite this impressive growth, margins are showing some strain. Supermicro reported a gross margin of 11.9%, with operating margins at 7.9%. This slight compression is due to aggressive R&D investments and evolving product mix. However, the company remains cash strong, with a solid $1.4 billion in reserves. The future looks ambitious. Supermicro is targeting revenues between $23.5 billion and $25 billion for fiscal 2025, with an even bolder $40 billion outlook for fiscal 2026. Expansion in Malaysia, Taiwan, Europe, and the US bolsters its production capabilities, particularly for liquid-cooled data center solutions. With over 30% of new data centers expected to adopt this technology, Supermicro is positioning itself as a market leader. Now let's talk about Dell. Its latest earnings was on last November on the 26th. Unlike Supermicro's hypergrowth, Dell is a mature tech powerhouse, posting a steady 10% revenue growth, reaching $24.4 billion this quarter. The highlight? Its Infrastructure Solutions Group, which grew by 34%, a clear signal that Dell is also benefiting from the AI revolution. Dell's profitability remains stable, with a diluted EPS of $2.15, up 14% year over year. Operating income climbed to $2.2 billion, while net income grew 11% year over year to $1.5 billion. The company is leveraging AI demand, but faces challenges in its Consumer Solutions Group, which saw a 1% revenue decline due to ongoing weakness in the PC market. So, which company is more profitable? Over the last 8 quarters, Supermicro's net profit margin averaged 8.5%, compared to Dell's 3.6%. That's a significant edge for SMCI. However, let's look deeper. Supermicro's gross profit margin has been declining, dropping from 18.8% to 11.2%. This signals rising costs and pricing pressures, a potential red flag. Dell, on the other hand, maintains a higher and more stable gross margin of 23%, showing its ability to manage profitability more efficiently. Operating margins? Supermicro still leads, averaging 9.3% versus Dell's 6.3%. But the gap has narrowed in recent quarters, with SMCI's latest quarter showing just 6.5% operating margin. Return on equity and return on asset tell a similar story. Supermicro's return on assets stands at 4.6%, with return on equity averaging 8.5%, solid but showing short-term weakness. Meanwhile, Dell's return on equity remains negative, highlighting its financial challenges. Let's wrap this up with an investment takeaway. Supermicro is the high-growth play. If you're looking for AI-driven hypergrowth, SMCI's 54% revenue surge and ambitious roadmap make it a strong long-term buy. However, keep an eye on its declining margins and financial filing delays. These risks could introduce short-term volatility. Dell, on the other hand, is the stable, diversified option. It's a dominant force in enterprise infrastructure, and its strong cash flow and steady profitability make it a lower-risk investment. If you want exposure to AI and data centers but prefer a safer bet, Dell is your stock. So, which stock are you betting on? Supermicro's explosive AI growth or Dell's steady dominance? Let us know in the comments below. Don't forget to like, subscribe, and check out AlphaStockAI.com for even deeper stock analysis. See you in the next video.